I'm very pleased to welcome back to the show Will Rhind, CEO and founder of GraniteShares. On the agenda today, the biggest tech IPOs in history are about to commence. What happened last week on Friday with the jobs numbers? Why did markets basically crater in a single day? Why are we getting a rebound today? And what's next for the entire stock market? Welcome back to the show, Will. Good to see you again.
Good to see you, David. Thanks for having me back on.
This is a very interesting time that we're living in. Everyone's talking about a market bubble, and yet no one's willing to completely short. It's basically, if I could sum up my show in one sentence, it's that everyone's concerned about another tech bubble, yet no one's outright shorting just yet. Now, the SpaceX IPO is making headlines. You're going to have an ETF on this, you told me offline, so we'll talk about that in detail today. Let's start with what happened last Friday. Jobs numbers beat expectations out of the water, and stocks actually fell on the news. Is this an era where good news, economically speaking, is bad news for markets, given that it may or may not signal a more hawkish Fed? What happened on Friday?
I think Friday was all about Broadcom, to be honest with you. And Broadcom, they beat earnings expectations. That wasn't the issue. The issue was more that the guidance the company gave wasn't revised upwards, or in other words, didn't meet market expectations, which was sort of priced to perfection. And I think that probably if this was in any other situation, this would have been fine. But given the rally that we've had in chip stocks over the last few weeks, I think it was sort of the one piece of potentially negative news that was needed as the catalyst to cool the sector off. And so Broadcom shares sold off. That was the catalyst in my mind for a broader sell-off in chip stocks. And obviously the NASDAQ itself, had its worst day for quite some time, falling about 4% of the day. So to me, the other factors that you mentioned, such as the strong jobs report, were contributing factors, but this was more about, I think, an opportunity for people to take some, I hesitate to even say it was bad news, because again, this is a company that not just beat earnings expectations, but, exceeded them. It's just the rally, I think on the back of the rally that we've seen, it was a bit of a sell the news event, which saw a broader cascade in tech, particularly semiconductor and chip stocks.
Okay, this signals a very important risk for investors, which is that if one stock, any one company that's big enough and has substantial revenues within the AI space could meet or miss expectations, like you said, it actually has the ability to bring down the entire markets. How do investors prepare for these risks that honestly we can't foresee because they're company specific?
I think that people just have to be, aware that volatility is going to be heightened, when we're at or near all-time highs in the market. And in many cases, this is not new, David, that we've seen this pattern repeat itself over and over again. If we take something like Nvidia, we've seen for, the last few earnings, actually this earnings was you could argue different. But for the last few earnings, the company has met and exceeded expectations, beat earnings and then raised earnings expectations, which is the best that, any company can do. But yet the stock is sold off afterwards. And so we're kind of used to this pattern of volatility around earnings, particularly with, the larger stocks within the Mag 7. And, this has created this kind of temporary buy the dip moment. And I think once people, realize or see the stock falling, it's quickly bought up, after a specific time. And we've seen that pattern repeat. So I think, volatility is always going to be a bit more elevated around this time. But again, it comes back to ultimately the fundamentals, which is these companies are growing at really crazy rates. And, ultimately, people are going to pay that price for growth. And it will always come back to that.
That is the key point. People will pay a price for growth. At what point is this price too expensive? In other words, the premium on the best of breed companies is too much to the extent that people are calling it a bubble.
That is That is the question. I don't want to sort of jumpstart your comments potentially here on SpaceX, but that's a great example of, a company that's coming to IPO, where this is not obviously a regular IPO. This is the most significant IPO in history. The largest, we kind of run out of superlatives to describe, this event. But one thing we can talk about is the valuation is clearly polarizing, just like a lot of the key stocks in the market, where on the one hand, you'll have people saying, well, look at the growth. SpaceX is going to be trillions and trillions of dollars in the future. So therefore, that's what you're paying for. And then you'll have clearly the more value orientated people saying that the valuation is way too high, and they're either not participating in the IPO or be looking for ways to even short.
Okay, let's talk about the SpaceX IPO. Good segue. You plan to launch, I believe, both a long and short ETF, correct?
Correct. So as you know, David, we're very active in the leveraged single stock space. And we have very active ETFs on Tesla, which has been a huge product for us over the years. And with SpaceX coming to market, again, we'll be launching a 2x long, a 2x short ETF on SpaceX, and obviously planning to get there for the IPO day.
Before we continue with the video, I'd like to address one of the fundamental problems of owning gold. Now, gold is seen in most cases as a store of value, but it has one major problem. It doesn't generate a yield in itself. And that's where today's sponsor, Monetary Metals, comes in. Monetary Metals introduces a model where gold can produce a yield paid in physical gold. Through their leasing platform, investors can earn up to around 4% annually, with yield paid monthly in ounces. That means your returns are measured in gold itself, not just in fiat currency terms. In an environment where many assets depend on price appreciation alone, this approach allows gold to serve both as a store of value and as a source of income. The metal remains your asset and can be redeemed at any time. Thousands of investors are already earning a yield on their gold through Monetary Metals, so visit their website today to get started and learn more. That's monetary-metals.com/Lin. Link in the description down below, or scan the QR code here and get your gold to start working for you now.
Okay. You're in a good position. I love this about what you do, because you're in a position to comment on both the bull and bear narratives, and we'll let people decide if they want to participate in either the long ETF or the short ETF. You're just democratizing the process for people to participate however they wish. Now, on the long side, I see it like this. Okay, people are talking about SpaceX being not even profitable yet, so why is it $500 billion in valuation? Well, I don't know. I'll let you comment on that. I just recall that when Tesla IPO'd, it wasn't making money either. It wasn't profitable. And yet, if you had judged it based on that one factor alone, you would have missed out on one of the best tech companies in terms of growth in the last decade. I'm not saying SpaceX is going to be the next Tesla. I'm just drawing parallels here. But more broadly, what would the bull case be for somebody looking to invest in I wouldn't even call it a tech startup at this point. It's pretty mature.
Well, the shorthand is Elon Musk is the bull case. That is the shorthand that, for a lot of investors, that's all they need to hear. But I think the more sort of, elaborate version of that is that this is a company that has Starlink. So Starlink is the jewel of the crown. If you're looking for something that is profitable, looking for a business that is generating significant revenue already and has significant potential going forward in terms of being, a communications-based company. But if you look at XAI, which doesn't make money at the moment, XAI is a direct competitor to Anthropic, direct competitor to OpenAI. Those are two companies that are most likely coming to market in IPOs that will be around the $1 trillion plus or minus, maybe a lot more than that. Who knows by the time that happens? So you have value there that is already ascribed to that particular part of the business. And then I think in terms of the rocket business itself and the business of just putting things in space, then, Elon himself has talked about the opportunity for housing, data centers in space, other type of opportunities where, it's really about believing in the future opportunity as opposed to assessing the here and now of these kind of ideas. And like we've seen time and time again with Tesla, that is the accurate parallel to draw here, that a lot of the story is based upon the future, not the today. So Tesla's story right now, for example, is less about being a car company, is less about the deliveries that the company makes on a quarter by quarter basis. It's much more about the autonomous story, the AI story, the robotics story, the robocab story. I mean, these are all the sort of the future growth opportunities which are driving investors, into the stock for the future, opportunities. So I think SpaceX is a classic example of exactly that, where, parts of the business are profitable, are very valuable, but the overall story is one of the opportunity tomorrow.
And if you were to look, you're right. So connectivity, Starlink, roughly 61 to 70% of revenue. Space rockets, 22% of revenue. Artificial intelligence, XAI, 17% of revenue. It's interesting how the majority of the revenue now is actually in the consumer commercial spaces, meaning Starlink. If you were to future project, let's say, the use cases that would drive revenue the most, not just for SpaceX, but for any other space-related company, what would humanity need that would require us to go into space that would actually be profitable to the shareholders? Let's think about some of these use cases here.
I mean, that's, I guess, the $1 million question with the space opportunity. And it will mean different things for different people. So for some people, communications will be sort of the main thing. Communications will be everything. For others, it will be about the potential for new sources of energy production and or storage. For others, it will be about, optimizing the challenges that we have here on Earth, particularly around AI and around data centers and the use the use of natural resources to do that, which is hence, one of the main arguments behind the data center and space theory. But ultimately, we don't really know what those opportunities are going to be like, and in many ways, they're being uncovered. The more activity is generated in space, and so I think again, just like the opportunity for Tesla when they first started, producing electric cars is very different to the opportunity now. It will be a similar thing with companies like SpaceX, and that's what will be baked into, in part, some of that valuation.
And I think the valuation aspect is one of the main reasons for why people may not want to buy it. So switching now to the bear argument. By the way, a lot of this came in from Bloomberg today. Apparently, the listing is already oversubscribed, according to anonymous sources. SpaceX's initial public offering is well oversubscribed. Banks leading the offering by Elon Musk's rocket company expected to stop taking orders from institutional investors on Wednesday after the market closes in New York. Closing the order books gives banks time to gauge demand ahead and advise the company on pricing. SpaceX's IPO is expected to price June 11th and trade the following day. The company is offering 555 million shares at $135 each, which will raise about $75 billion and value it at about $1.8 trillion. A few questions there. I'll let you respond to this first. What does it usually mean to you as an investor when we have an oversubscribed IPO ahead of the launch?
Yeah, I mean, I think the simple answer to that is this is the best news possible if you're clearly the company going to market and if you're looking for a gauge of sentiment more broadly. I mean, clearly you want to be oversubscribed as opposed to undersubscribed, which means that you've got more demand than you can satisfy with supply.
The biggest reason for people not to participate, according to some of the managers fund managers and analysts that have talked to me, is that if you get in now, your exit liquidity for the venture capitalists who got in way before you. And again, the company is raising about $75 billion at a $1.8 trillion valuation, which when you think about it, isn't actually a lot given how you value the company is. What would you say to that comment?
I mean, I think that, of course, that's true to some degree, but somebody has to buy the IPO shares. Like, there's always a progression. I think to maybe what's also implied in your question, which is, I think, a concern, is it's not just about the level of oversubscribed or the oversubscribed nature of the offering. I think one genuine question is, out of all of those shares that have been sold in the many years up to this date, how many of those shares are out there not subject to any kind of lockup? So in other words, how many of those shares could be sold, very quickly, day one, first week, etc. And that could have an impact, a negative impact on the price. And that maybe has cause for caution in terms of some institutional investors.
The fact that it's at a $1.8 trillion valuation, and nobody I've talked to could justify that.
Apart from the banks that are selling it.
Apart from the banks that have been selling it, I haven't talked to the bank analysts yet. Maybe that's on my to-do list. But let's take the assumption. Let's just go with the assumption that relative to its peers, it's more expensive and probably one of the more expensive IPOs ever on a valuations basis. Is that just in itself, is that a case to stay away from it?
I think for some people, absolutely. I mean, I think if you're a valuation or a value-orientated buyer, you're almost certainly not going to be in SpaceX. This is not the kind of opportunity for you. And again, it goes back to not just SpaceX, but a lot of the large tech companies that, people either have to look beyond the valuation today to the growth opportunity in future, or they're going to be obsessed with the valuation today and clearly have to make up their minds whether it's a price worth paying. And for a lot of people, that's where they're always going to fall over, is they'll look at it vis-a-vis the market, a broad and average sort of ratios of S&P 500 or the NASDAQ or whatever it may be, and determine that a stock may be overvalued or undervalued. But ultimately, I think the story of tech, certainly over this millennium so far, has been that people will pay for growth, and the valuation to some degree doesn't really matter if the company is growing and is delivering on the expectations that it's setting for the market more broadly.
There are historical precedents for what happened when a company claimed to have the biggest IPO ever. Two examples come to mind that I looked up earlier. Saudi Aramco in 2019, the offering raised about $25 billion. Alibaba in 2014, they raised about $25 billion. Both at the time claimed to be the largest IPO ever, and both disappointed investors shortly after. Is there a pattern in which big IPOs marked market tops for these companies?
I don't know whether you could say that, with Aramco coming to market or even Alibaba coming to market, it was a top, because clearly, tech in the case of Alibaba has gone on, strength to strength.
Sure.
Regardless of the oil cycle at the particular time, oil is clearly not going away. I think that these are always marquee moments, and clearly this is a time when the market's trading at or near all-time highs. There's a fever pitch around tech more broadly, particularly AI. I guess it's difficult to predict these kind of things, and that's why I think a company like SpaceX is so interesting, because investors ultimately will have to make up their own mind. Is this the next Tesla? Or is it something that could disappoint people?
I want to press you for what you think is going to happen. How would you answer that question? If you don't have a very strong opinion either way, that's fine. But walk us through your thought process of how we should address the question you just posed.
I honestly don't have a strong opinion on it. But I would say, if you're asking clearly for my personal view would be that betting against Elon Musk, I think, is a very difficult proposition. That, I think there's an argument to say the evaluation at a point in time and focus on that. But look at the data. The data is telling you that there's demand for this IPO. There's a whole reason we're here. There's the reason why the numbers are so big and people are trying to wrap their head around. It's a global phenomenon. So I just came back from Japan last week, where I was there for business. And people are talking about it in Japan. They're talking about it in Korea. They're talking about it in China. This is not just a US investor story. It's not just a US retail investor story. It's a global story. And, again, I think Elon Musk has been at the forefront of so many successes, so many technological innovations. If you're looking at this, the value that's been created already, just in terms of the progress, it was almost unthinkable, to have a commercial rocket business, outside of a government, not too long ago, and to have Starlink, the potential for what could be done in space, which again has been, really very little in terms of broader commercial activity. Plus, obviously, the AI opportunity, just broadly speaking, there's a huge amount of potential. So I think, from me personally, certainly would not put it past Elon Musk to have another, phenomenal success here.
Well, people can decide for themselves, like you said, and either long or short or not participate. Tell us about the ETF process of packaging a stock into an ETF. Obviously, you'll need to wait for it to become public first, and then what's the next step, and how long would it take?
Yeah, so this one's kind of interesting because this is about launching an ETF on the day. So, again, in full disclosure, I can't say too much about that because the ETF hasn't gone live yet, and obviously the company hasn't IPO'd. So what's unique about this time is that we're trying to synchronize those two events. So they're having the ETF live at the same day the company goes IPO. Normally speaking, you wouldn't have that to worry about, and you just make a filing with the regulator, you comply with all the relevant disclosure requirements, and it takes about 75 days, typically from when you file to when you can launch. So this one is unique in the fact that you're trying to synchronize those two events. But other than that, it's a fairly straightforward process for us at this time in terms of bringing out 2 times long or 2 times short ETFs on public companies.
All right. So do you have a rough timeline as to when we can expect your ETFs?
Well, the plan would be Friday this week on the IPO day. So again, assuming that all of that happens, still to some degree up in the air, I think. But the plan is to be there at the same day as IPO. Okay,
excellent. Now, moving away from the SpaceX news, any any major tech news or narrative that you're watching out for in the next week or two that could move markets?
I think the main thing, David, was the potential aftershocks from what happened on Friday with Broadcom. Yeah. And whether that was just a sort of an isolated event, or like I said, there was some, aftershocks from that. So far, we haven't seen that on Monday. And I think the market this week will be completely consumed with the SpaceX news. But looking beyond that, it's about the AI story. And again, everybody's scrutinizing the AI story on every earnings call and every quarter. And I don't expect that to change.
So Broadcom fell about 8%, I believe, after weak guidance, like you said. Semi sold off. Now, if you were to, again, give forward guidance here, if you could, on what may drive semiconductor demand going forward, and what may, on the other hand, may cause other Broadcom moments, so to speak, which is that perhaps tech companies issue guidance that would disappoint on semiconductor demand. And that in itself would bring down NVIDIA as well as other chip companies that occupy now a huge portion of the stock market index. What would you say would be the main drivers and catalysts for more demand, and on the other hand, catalysts for potentially less demand?
I think the more demand is what we've already seen, the pattern that keeps repeating, which is the hyperscalers, as the market calls them, which are the largest users of the chips. And those companies have not just put a large amount of capital expenditure in their plans, but seemingly keep increasing expectations to the market in terms of the amount they'll spend on AI and therefore AI chips. So that's been the fact pattern now of the last couple of years, is that this AI capex, the numbers keep increasing and therefore the demand keeps increasing. And that's why you've had these mega rallies, and not just NVIDIA, but with other chip makers as well across the board, and pretty much every chip maker in the market. So what reverses that is the opposite. And that would be a signal that either capital expenditure was to decrease, and therefore demand would decrease, and or the other sort of deep seek type argument, which is that you didn't need as many chips and you could do more with less. So far, those two things haven't really held as part of the narrative. And the overwhelming narrative is still about you need more or as many chips as you can get your hands on. And, it's a question of just how much are you willing to spend on those to get those chips.
The last point you brought up is pretty important. I'm looking for evidence going forward of AI advancements that would actually cannibalize on other tech companies. Exactly what you said. If advancements necessitate fewer chips to be used, good for the companies that need fewer chips, bad for everybody else selling chips. We'll see if that happens in the next year. Okay,
yeah.
I want to turn now into some macro news and what we can expect out at the Federal Reserve next week. Next week should be momentous if all goes according to plan. We can expect Kevin Warsh's first appearance as a Fed chair at the FOMC press conference. What are you expecting? The market is expecting no chance of a cut, no chance of a hike at the next meeting, just nothing to be changed for the Fed funds rate. But what are you expecting to come out of Warsh's announcement? Any key words you're looking for, or key indicators of his attitude, or gauge of where he wants to take things?
Yeah, I think it'd be more about the narrative rather than the actual substance. In other words, like you said, I think the market is pretty much dead set on there not being a key event, whether it's a rate rise or a rate cut. So I think it's about the narrative and how he positions vis-a-vis Jerome Powell, and market would be looking for any kind of differences which potentially would set his path differently from that of his predecessor. And so I think it will all be around, the press conference and around, any sort of guidance or any language he uses that allows the market to sort of interpret what his position is and perhaps how he's going to take things forward differently.
Okay. Are you expecting inflation expectations to remain elevated throughout this year, which may be a theme that's going to be addressed by the Federal Reserve?
I think so. I mean, with commodity prices so high, particularly with energy prices so high, I think that's the environment that we're in. And so unless something changes really on that front, David, I think we're going to have inflation numbers that are slightly more elevated than certainly expectations were at the beginning of the year.
GraniteShares also offers ETFs in the commodity space. So in the last segment of our conversation, let's turn over now to a few metals. Gold, the bar ETF in particular, covers gold. I'm looking at gold, platinum, and palladium, all these so-called precious metals. They've all had a similar run, which is peaking earlier in the year and having fallen substantially from their peak. And if it's just one metal, we can maybe talk about it as, what happened with this metal narrative. But if it's pretty much consistent across a precious metal space, we have to ask ourselves, what happened with precious metals? Do you have an explanation for us?
I think that the explanation is going to be similar across the board, which was a combination of a reversal of market expectations, which I think market expectations were for a weaker dollar, and that was part of the Kevin Warsh narrative. That was a part of the changing of the guard at the Fed. That was a part of, the United States economic story, and that's completely reversed, of course, with the war. And so for now, we've had a big rally in energy prices, which has put inflation expectations up. We've had a stronger dollar, not a weaker dollar. And we've had, albeit no rate hikes, clearly, but I think the market is skewed more towards even contemplating or even thinking about the possibility of a rate hike as opposed to a rate cut. And certainly around the world, we've seen some rate hikes as well. So that, I think, is the main narrative, that we've gone from, and you can argue on a temporary basis, but of course, we're just talking about the price action from the peak, one of dollar weakness to dollar strength, of rising inflation expectations as opposed to falling inflation expectations. And that's played clearly on the price.
I was just thinking about this last night. Why gold is used as an inflation hedge or treated as an inflation hedge when it doesn't have a good record of actually matching the CPI index. And then it occurred to me that gold actually tracks forward inflation expectations quite well. And so that made me think, well, why would the market, which is a discounting mechanism of the smartest people in finance, consider gold a forward hedge against inflation? In other words, a hedge against forward guidance on inflation when it historically doesn't line up with CPI very well. Perhaps gold actually leads inflation or inflation expectations, which is to say, maybe the gold market and to some extent the inflation expectations market expected the tensions in the Iran conflict to create inflation, and now it's showing us that, well, perhaps inflation expectations won't persist for that long. Maybe that's what the gold market's signaling. Those are just my own musings. What do you think?
Yeah, I mean, I think that's certainly the better way to look at it, is that it's less about gold being, when people say that gold is correlated to inflation or that gold is an inflation hedge, I think the more accurate statement is to say it's a better predictor of inflation. It anticipates inflationary moves better than it does react to inflation itself. So, like you said, if you look at the correlation just against gold and CPI, that's less positive than gold acting as an anticipatory event or anticipatory move of future inflation, which is it's more reactionary on that basis.
Right. Okay. And finally, a lot of IPOs are happening this year. Why do you think they're all happening at the same time? Coincidence?
It's a great question. I don't have a great answer for that, other than to say, that there are companies that have built up significant amount of capital. I don't think it's a coincidence, or the coincidence part is that these are businesses that need a lot of capital. So therefore, when you're looking to raise capital as a private company, that has been, at least the trend over the last 10 years, that's been a lot easier to do than probably at any point in history. And that's one of the main reasons we haven't had, as many IPOs come to market. But now, clearly, I think that's also, these companies need to tap the public markets to do that as well. Hence, they're coming to market. The other part of the coincidence, maybe, of course, we're riding an AI wave, and these companies, at least probably the major ones out there, have AI at the core. So, from that perspective, I think it's probably a cycle whereby, we always see more activity, closer to the top of the cycle and at the bottom of the cycle.
Yeah.
It's easier perhaps for the companies to raise money, easier for them to tell their stories, when the narrative is strong as opposed to when the narrative is weak.
All right. Well, thank you very much for your thoughts. Where can we follow GraniteShares and stay up to date on your releases and information?
GraniteShares.com, the main website, or for anybody on X, it's GraniteShares at GraniteShares on X or on LinkedIn.
Okay. Thank you very much, and we'll speak again soon. Take care for now, Will.
Thanks a lot, David. Appreciate it.
Thank you for watching. Don't forget to like and subscribe.